1140 The Fan. Talkin Money.
And the action continues on Talkin Money with Jeff Tarbell.
All right, how you doing? Sounds like our phone line is hanging in there a little bit today. 339-1140, 1-800-920-1140. You can text us at 441140 if you like. We are out live at 2820 Truxell Road. We're doing our open house tour out in the Natomas area. This is in the south Natomas area, kind of between 80 and West El Camino. I'm going to do a little text question for you, and we'll pick one of our respondents and give you a gift certificate to the Hellwig Winery up in Plymouth. You can
When are we going up there?
Friday night concert series. I think when their concert series starts this summer, we're going to go up there and do a live show. That'll be fun. So let's do this, because I got a text here from my wife who had a very good point, and we'll use this as our quiz question. So you can kind of do yes or no, or you can put a response to it if you want. We'll pick out one of our texters at 441140. Since we don't have to pay Manny, Mo, and Jack over there any money for our texting, or we'll give them a $300 check back. So here's this was a text from my wife, and this was refers to a couple things. It refers to our discussion about the gentleman who, from General Motors, created the delayed wiper system while he was an employee at General Motors. And we were just talking about, what was the other one we were talking about there for employees? Our quiz question earlier. The guy who created the texting while he was an employee. Now, it didn't say in the article that he was working at Nokia or was on some sort of a project to create texting. So the question is this, or the thought is this: if an employee invents something that his company is paying him salary, so he creates something while he's on the job, does that person, or should that person, be entitled to ongoing royalties for their intellectual property or their invention outside of what they get paid from the company? And so what do you think is the right thing? So if you're running a business right now and you're paying your employee to work for you, particularly if you're paying your employee something in the R&D department, and he creates something, maybe it was on the task you'd given him and maybe it wasn't, something related to that, does he have the right, in your opinion, and this will be our text question, yes or no, 441140, does he have a right to go back out and create a patent for the item or be entitled to some kind of royalties beyond that when you've been paying his salary the whole time and covering the person? Now, General Motors said no, we're not paying you. That was your job. Your job was to create parts for our cars, and the courts said yes. It took him 15 years and you can imagine a boatload of attorney's fees. But this gentleman here at Nokia did not sue them or make any case for the texting rights. So what do you think? 441140. We'll let this go on through the next couple breaks, and we'll pick a couple winners and send them up to Hellwig. Yes or no? If you have an employee, or if you are an employee and you create something that's intellectual property or a true item, and you're working for an employer who's paying you to do your job, are you entitled to patent that or get royalties off that item? Let's just see what you think. We'll let that roll at 441140. Speaking off the text line, Jeff, I bought a home in 2009 for $179,000 at 4.9%. I since lost value on the home, of course. With that said, I'm wondering if there's any refinance options for people in my predicament. Make all my payments, have good credit. Seems like they should. It seems like the times are working against me. The answer on those is maybe, and that's the. I bought a home in 2009. Right now, the programs that exist currently are for those people who bought generally prior to 2009. I think the cutoff was about April of 2009, when Fannie Mae and Freddie Mac said if you bought before that time frame, we'll let you into our HARP 2 program. And the HARP 2 program, in most cases, will allow you to refinance without the use of an appraisal. And so that's what we're doing a lot of right now is the HARP. FHA, if you happen to use the FHA program, never had a restriction from you refinancing, as far as there never has been an appraisal on an FHA, or for that, typically a VA loan also, although in California they've stopped that. So the FHA Streamline will allow you to refinance without an appraisal all the time. The only catch with FHA is you have to make sure that your payment drops at least 5% in terms of total payment, otherwise FHA won't do it. So there's a little bit of a catch there, that they want to just make sure that you're not being just rolled into another loan, so someone's making fees off of you. They want to make sure there's a benefit to what you're doing. So there is some discussion. Let me see if I can find it here real quick. There is some discussion about a HARP 3, if you can believe that. We just got pregnant with HARP 2, and now we're going to get knocked up with HARP 3. And that's if I can find the article about it. Here we go. This is the discussion, and I will say that I don't know that it's going to see the light of day, but here's what's being proposed for all of the people that are out there now that are upside down, that are not Fannie or Freddie or FHA or VA or USDA currently. So basically all those privately held type of loans. HARP 3 is being proposed to address the FHA loan-to-value requirements and allow people to refi up to 140% of the loan-to-value and bring them into the FHA program. So that's the discussion point. There are some other things that are going along there as well, but one of the hurdles, if you will, is that you're taking a group of loans, a group of individuals who are knowingly upside down. You're moving them into FHA's program. Yes, you're going to get some insurance fees out of them, but we're now putting the potential loss for all these mortgages on the backs of FHA, which is really the backs of the U.S. taxpayer. So I'm sure for those of you that have those loans that have not been able to do something, first of all, it's only up to 140%. So that's maybe some of you.
It's a few people.
Yeah, it's probably statistically probably a third to 40% of you. But for the rest of you who are U.S. taxpayers, do you want to encourage or do you want to be on the hook potentially for paying off losses on these mortgages, which you do not have to pay now? And yeah, you're going to get a fee. FHA is going to get an insurance fee. They're going to get a fee up front. They're going to get a monthly fee. But you don't have to lose a lot of mortgages to those fees to begin.
Yeah, FHA is already indulged in quite a few with the streamlines and everything else going on. For them to take on that impact could be tough.
Yeah. So that's the question: is would you, as a taxpayer or as a senator or a congressperson or whatever, would you be willing to bring these people into the system and take on their liability when you don't have one now? So we'll let that hang out there. And we also have our pending text question at 441140. We'll let that hang out. We'll pick a winner off the text line as well at 441140. Would you allow one of your employees, or do you think it's right that if one of your employees creates something while he's under your employment, creates a product, creates an intellectual property, that he or she gets an outside ongoing revenue or entitlement to that product when you're paying them the whole time to do the job? So we'll yes or no at 441140. Chris, you got someone on hold there? Okay, Mark, go ahead and pull up Mark. Mark, welcome to Talkin Money. How you doing?
Hey, Jeff. Hey, real quick on that HARP 3. You know what? When is Congress or when is somebody going to finally do something for the responsible homeowners? What's going on with these homes that are basically you're keeping people in them, which is going to keep the obviously the value of the home up because it's not going to sell for whatever they owe on it. But the thing is what I don't understand is the responsible homeowners like my wife and I. If you give those people, some sort of a break, redoing their loan, lowering their interest rate, or whatever you want to do, that's going to put more money into the pockets of people that have been responsible. Which means they're going to go out and spend more money. They're going to go out and maybe buy another property or go out and buy maybe redo their housing or I just don't get it. But getting back to the question about if you work for a company, as long as you can prove, and the key is as long as you can prove, if the product that you have invented has nothing to do with the present company that you're working for, I mean that's a totally different situation. But in the electronic industry, you sign actually when you sign on with these electronic companies. Whatever you come up with, it is part of that company's patent, and it's very prevalent in like with HP, Cisco, especially when you're doing program design. So even if you are doing it on your own, it is part of the learning process with the present employer. So or whatever you're using, but. I agree. I agree with the court decision. I mean, it's when it comes to some of the things that are being being worked on. It's going to be hard to prove though that you didn't do this while you were employed, that you were doing it on your own. So that's
right.
That's
very good. Hey, Chris, put Mark back on hold. Mark, I'm gonna address your comments after the break. We got to take a quick break. Chris, put Mark on hold. We'll get his name and number. We'll get him out some Gym Boys or something fun for Mark. And his comment I hear half a dozen times a week. So at least once a day, I get that exact comment, and we'll address that when we come back as well. So Mark is, and I do agree that if you're working in the widget factory and you create a non-widget somewhere else at your home after the hours, that's not what we're talking about. We're talking about something that's created within the confines, and you probably did some work there during the hours on the job.
That was the case with Matty. He was actually hired to develop communication systems. So
he was on the job there.
And he was
well.
a modest guy, so apparently.
Yeah,
that played a part of it.
What does modest mean? He's got a good job now. He didn't talk about.
Apparently, he's making enough money for his lifestyle.
Yeah, okay. So he didn't want any more money, huh? Matty's probably changed since that came out. Hey, Chris, we'll go ahead and take a quick break. 339-1140, 1-800-920-1140. You can text us if you'd like at 44-1140. My name's Jeff Tarbell. This is Talkin Money, and we'll be right back.